Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about the best value mid caps of India which have corrected from the top and which can be bought for the next 5 years. I'm not talking of the next 1 or 2 years, but for the next 5 years. They look pretty attractive. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these 5 companies, I have a small request to kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 20% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can get the YouTube membership or WhatsApp membership by messaging me on with an email on an email. The criteria for picking up these stocks, these are established brands and strong managements, all around or above 20,000 crore market cap. So these are not smaller companies, these are mid-cap companies, diversified yet market leaders in their own space. There's low debt but no pledging in them, and institutional holding is good. So whether FIIs have sold, but DIIs have strong institutional holding in them. Return ratios are solid, and although over the last 1 year, 1.5 years, numbers have declined, but over the last 5-8 years, the ratios have remained very strong. The first in this list is Jubilant FoodWorks. My prime reason for picking up this stock has been the correction that the stock has seen, especially after the CEO resignation and everything that has transpired with the numbers, etc., and now the inflationary point. See, the stock has already corrected more than 50% from the top, around 60% it did, and now it is recovering. It manufactures a number of food items, not only pizzas, but a number of food items, have Dominos as its main brand. And they ventured into other items like salad, biryani recently by acquiring companies. So these things will take time to shape up and bring revenues. The market cap of the company has slipped to around 40,000 crores, which is not very, you can say, it's not exorbitant at the moment with the kind of sales that the company is doing. Whenever they hire a new CEO, and I believe that the overall management of the company and the promoters are not that you can say dumb, as I can say that they would hire somebody who won't be of higher repute. So hopefully whenever they hire the next CEO, the stock should run. I think it's coming at a very good levels at the moment, and if you discount the next 5 years earnings, I think things could be extremely good for the company. The second in the list is Tata Elxsi. Now you might say that it's trading at 95 times, 97 times earnings, but if you look at its performance over the last 6 months, there were 2 occasions when the stock fell to 6,000, 6,500, and the recovery went to 9,000, 8,500. And again, I mean, there were twice in February, and then again in April it fell, and in a month's time it's back to 8,500. So that shows the pedigree of the stock, market leader in its space. It has global exposure and serves a number of industries like BFSI, autos, consumer, tech, etc. So a brand in animation domain. So it made up its name through the animation sector by making all the cartoon clips and all. They were helping in that with the back end operations. So it has been a consistent performer, and return ratios has been very strong of around 40%. It has run up probably a 10-15% decline from here. Could be a very good buying opportunity around 7,000 levels. The third in this list is Laurus Lab, a fast-growing mid-cap API firm. Extremely high return ratios when you compare to other pharma companies with improving margins. It had a couple of quarters which did not go well. They tried to you can segment themselves into different other products, but now they are back to high margin products, and hopefully numbers are set to improve even further, and that is justified with the kind of run up the stock has seen over the last, you can say, 1.5 months from 480 levels. In the last 2-3 months, the stock has run up from 480 to 600, now back to 550, 560. These are decent levels to get into the stock. The market cap has grown. So when I made this presentation about a couple of weeks back, the market cap was around 29,000 crore. It has gone up to 32, 33,000 crores. I still believe that over the next 5 years, it could be one of the larger API and one of the large cap pharma companies going forward. The fourth in this list is Coromandel International. Now it provides crop protection products along with fertilizers and phosphate, and it did not perform that well for the first half from April, say March, April or so, but has started performing this month, and I think the performance should continue throughout the monsoon season. The way the numbers are panning out, it went to around 940, 950 and has declined from those levels. Mainly produces pesticides and speciality nutrients. Top management, strong pedigree, and agri economy will pick up as things get better. And agricultural is one space, even during the pandemic, that did extremely well on the ground. So monsoon has remained robust over the past few years. It will be pretty normal this time around also. So I think rural income will pick up and will drive results from FY23 onwards. I see good 20% CAGR over the next 5 years on the stock. The fifth in this list is Dr. LAL PATHLABS. Now, this is an interesting pick. I believe that it's kind of a risky bet, yes, because of the kind of competition we are seeing with Tata and other, you can say, companies getting into the diagnostic domain. But it has had its roots enthralled in the diagnostic space for many years. I think if they can just expand into other geographies, say south and west of India, then the sales and profitability could increase even further. Although I believe that the margins will shrink going forward, so no immediate reward is possible on the stock. But over the next 5 years, if the stock continues to go down, I think valuations will become extremely cheap. So these are good levels to start buying afresh, and probably 20% lower would be even better. I don't see more than 20-25% decline on the stock from these levels. We've seen a bit of an up move a few days back, so I think things could normalize here. Everything is good at a price, and now with 50-60% decline, probably another 10-15% may go, but this is a value buy from a 5 years perspective. So this is a video on the top 5 companies in the mid-cap segment that I believe could continue to do well. Please like and subscribe and channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.